Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about top medical diagnostic stocks. With that I got two images here. First one is the Bionano Genomics. These guys are into studying the chromosomes and detect any issues. And second one is Fulgent Genetics. These guys are into detecting all the diseases. Very low cost type instrumentation here. So with that, let's cover these stocks and all the many good stock in the medical diagnostics space. So with that, here is the list of 20 stocks. These are sorted by 1 year performance. The company at the top here, BNGO, Bionano Genomics, it's got top performance of 1202%, 1500% in 1 year. And from then onwards, it's a descending order. Next company is Pacific Bios, 920%, and next is Fulgent, as you can see here, 392%. Let's look at a couple of these companies here. The way I want to highlight this is really, I look at the sales growth here. I want a good sales growth. I also want good gross margin. Those are the two key priorities. And also, I want to make sure there's a good performance when it comes to 1 year performance. And I would look at things like price to sales ratio. If it is higher, say higher than 50 or so, I would watch out a little bit. And it's okay to buy on a pullback in those scenarios because normally, good stocks will come with a higher price to sales ratio. And I also look at short ratio. For example, some of these stocks have got high short ratio. For example, Fulgent here, high short ratio. I would watch out for these and see it's a good time to buy those with a higher short ratio. So with that, let's talk through a couple of these companies. First is Bionano. I like the stock price. It's a very low price here, $1.8 billion market cap, and they got good sales. Small company, $9 million sales, and I think they got a good quarter-over-quarter sales growth, nice gross margin. Little pricey from a price to sales perspective, and short interest is a little high, so I think this is where we got to look at performance here. As you can see here, performance is very nice in 1 year, 1500. As you look at 3 month, 1 month, 2 week, 1 week, I think 2 week, 1 week is good. I think in one day, they dropped 5%. So I think you could a little bit wait if you want to buy more, because in one day today it dropped 5.16%. So you could wait for a day or two and then initiate some position here. Given it's a low price stock, you don't need to buy all at once. You could buy a little bit at a time. Any good news, these shorts will get squeezed and stock can go up. Next is Pacific Bio. I did not highlight this much because I see the sales growth is negative, but not too much negative. It's manageable, and they got a nice gross margin here. I think you could invest in this also. Given stock has done nicely in 1 year, and they've done nicely all the way through. Today it pulled back a little bit, but overall performance-wise, it's pretty solid. You could buy a little bit on a pullback here. Next is Fulgent Genetics, and as you can see here, stock price is $79, and they got very nice 1 year sales and very nice quarter-over-quarter sales. These numbers you got to be taking it with a pinch of salt, because last year was very good for these diagnostic companies with the COVID diagnosis, and these guys have made a lot of money with the COVID tests. But now with the COVID shot, people are taking COVID shots. You could question, hey, what? Will there be more tests, or will these companies will take it easy a little bit? That's why these numbers look very good sales growth compared to last year, but we got to watch out a little bit. And very nice gross margin. I love their gross margin, 78%. And these guys have got very high short interest, as you can see here. Earnings is around the corner. If they have any good news, these shorts can get squeezed and stock can go up. And price to sales ratio perspective, it's not an expensive stock. It's very very affordable from a price to sales perspective. And as you can see from a performance perspective, they've done nicely for 1 year. But as you look at 3 month, 1 month, 2 week, 1 week, 1 day, they've dropped so much. As you can see, that's the effect of these shorts here. These shorts are really pulling back the stock. I think I feel like at this point stock has fallen so much. There might be a chance that we could start buying slowly, and there may be a chance this might go up. We'll go into a little more detail on this one. Then we got Aspira. I think this one also has got a good sales growth here from a quarter over quarter. Nice gross margin, a little pricey from a valuation perspective. Same story here. They got a high short ratio. Then I think we talked about the Twist Bio. I think this is one of my favorites here. I see very good sales growth here in Twist Bio. Nice gross margin, very good institutional backings. Little pricey though, but very good performance also 320%. I think I like these numbers here. That looks like it's a good stock to buy. Little pricey, but it's okay. Not too bad. Then we got DermTech. I think we talked about DermTech last time. This is one of the good stock here. Nice sales growth. Gross margin is negative, a little bit pricey from a valuation perspective. Looks like today they dropped by 6%, but overall 223%. And also they got a high short ratio. Any good news stock can go up. So let's look at a couple more here. Natera, same story, good sales growth here. I like all these stocks here. Guardant Health, this is one of the steady Eddie type stock, always does good. And NVTA we talked about last time. This is also a good stock, a little bit heavy on the debt, but I think overall they're doing well. And they also got high short ratio, as you can see here. Then we got Meridian, Agilent. Agilent is one of the steady Eddie stocks, as you can see here. And I think they got a good performance last year. That's a good one. And NEO NeoGenomics, IQVIA, Exact Science. I think these are all, Exact Science has got a very good sales growth here. I think it's also a good one to buy on any pullback. And Danaher is one of those good old companies, always does very good sales growth, and performance is also pretty good. It's a steady Eddie type stock. Next we got a couple more here. As you can see here, LabCorp. It's again one of those very good stocks, always does well. Sometimes it pulls back on the earnings. Those are our opportunity to buy. But I like the sales growth here. Nice gross margin and institutional backing. PerkinElmer, same story. Nice sales growth here, nice gross margin. And Thermo Fisher is one of those good old companies, always does very well. I think they got 40% performance so far, good gross margin, good sales growth. Dexcom used to be darling of Wall Street a while ago, but now they're kind of doing okay, but not compared to their previous self. But I like the company, doing very good from a sales growth perspective. Nice 34% performance for 1 year. And then you got a couple more here. Quest Diagnostics. It's also a good company. QRGen, Qdel, and Core Diagnostics. A couple of these companies here are in red for a year. So I think given they got good sales growth here, and they also got a good gross margin, these companies can do well. As time passes. So with that, let's look at two companies in a little more detail and see if there's a good opportunity to invest. So first one is Bionano. Its ticker symbol BNGO. As you can see from the stock chart, stock has done nicely last year. Most of these diagnostic stocks have done very nicely last year, but this year it's kind of trading downwards. and now there is some sign of stock bouncing back. You got to watch this little bit. I have a feeling that this stock might bounce off of this mid band of Bollinger Band. There's a good chance. As you can see here from RSI is kind of picking up here. They're done nicely, going up, now kind of flat to down. I think there is a chance this can bounce off of this mid band and go toward the higher band. And from a on the balance volume perspective, I see pretty steady on the balance volume. That kind of indicates there is interest from people to buy this stock. So with that, if you see here, it's a life sciences instrumentation company. Helps with the genome analysis. They got this machine called Sapphire. And it looks like they help with the study of chromosomes, changes in chromosomes. I think overall the company is a nice company, and they also have some news here. It dips more than the broader market, and it's got some huge deal in UK, which is good. And they also study this DNA replication. So overall, from a news perspective, I think it's positive news. And if you look at the fundamentals here, company has got solid quarter over quarter sales growth here, good gross margin, price to sales perspective, it's a little higher, little pricey from a valuation perspective. And they've done nicely for the year. That's a very good performance, and they're 57% down from 52-week high. So stock has fallen off, as you can see here. And from a margin perspective, these guys are not making money yet. They're losing money, losing 39 cents, per share. But I think they got good cash at 38 million, some debt which is completely manageable, very liquid company. 3-month average is 29 million shares traded, and today's volume is 21 million, which is very good. Institutions are buying the stock. I think it's a $6 company. Institutions are buying. That's a good news. IV percentile is 55. So I would not buy call at this point. But if you want to put at a lower, if you want to sell, put at a lower price, or I think that could be okay, because IV percentile is a little bit high. You can make some money off of the premium. And put call ratio is low. That means there are a lot of people in the options market betting this company's stock will go up, which is a good sign. And earnings is coming up around the corner, 5/13, so a couple 2 or 3 weeks from now. So with that, I think this company has got a good setup. This might go up, but one thing to watch out for is really some of this COVID plays. uh, these stocks have done nicely last year, so that's one thing to watch out for. But I think since stock has fallen off so drastically, there's a chance this can bounce off of these levels. So with that, let's look at next one here. Next is Fulgent Genetics, ticker symbol FLGT. As you can see here, before you go to this here, let's go to the chart. Fulgent Genetics, from a chart perspective, I think the company has done nicely last year. 2020 was a great year for this company. Its all-time high was 189 in 1 year chart. And as you can see here, since early this year, stock has fallen off the cliff very badly, and now they're trading around $79. So this is where at this point the Bollinger Band is getting narrower, as you can see here. I think that happened in the past over here. This is not, this is really narrow for a long time, but here it got narrow, then here it got narrow, went up, narrow, went up, here again it's narrow. So by looking at this, if there is a earnings here, and after the earnings stock went up, one more earning, after the earnings stock kind of went up a little bit, then traded sideways. So it's at this point, as you see here, from an RSI perspective, RSI is falling off, as you can see here, 38 pointing downwards. But on the balance volume indicates people are really buying the share, so it's really steady at this point. So I think there are some folks who are buying the share, taking advantage of this bad share price depreciation or decrease here. And as you can see here from a earnings per share perspective, I think last time they were done nicely, very good earnings per share. Sales is very nice, as you can see here. It's a good sign. 2020 was a great year for this company. And shares outstanding is not too bad. I think it's a little increasing a little bit, but it's okay. The company has done nicely in 2020. And these guys are really into COVID-19 testing, genetic testing. I think this is where there is some concern that, hey, whether the COVID-19 testing will continue as people take more and more shots. That's something people are speculating. So with that, from a news perspective, I think numbers explain this is a hyper growth company. It can make you rich, according to Fool. And I think people are questioning about this healthcare stocks with this Biden's American Rescue Plan. And I think here also people are talking, with the COVID shots and sinking COVID tests, whether these companies will make money or not. Some of these news is circulating, as you can see here. And from a performance perspective, from a fundamental perspective, I think company has done very nicely for 1 year, quarter over quarter. It's very good growth. It's in thousands, astounding growth. Nice gross margin. Short float, short interest is very high, 28%. As you can see here, they've done nicely for 1 year. I think shorts at this time are thinking, hey, you know what, this company stock may come down because COVID tests are becoming, at a lower pace. That's what shorts are betting at this point. And from a technical perspective here, I think, and even fundamental perspective, these guys have a good margin, 50% net margin. These guys are making money. And as you can see here, they got some debt, which is very low, and good volume. It's a liquid stock. Insider, there is some small sale. It's not a big deal. Institutions also very small sale, not a big deal. IV percentile is high, so I would not buy a call option at this point, given it's a high IV percentile, and also earnings is around the corner. So if you are bullish on the stock, because IV percentile is high, you could even sell a put option, or you could even sell a strangle. But if you sell a strangle, be careful, it might spike. So if it spikes at the higher side, you might want to buy one more call option at a higher price, so that way you don't really expose yourself too much. And other strategy with the high IV percentile is really, I think it's things like strangle, buying, selling the covered, selling the put itself or put spread. And you could even do a call spread. You could sell a call spread at the higher price. Those are some strategies. Basically, premium selling could be better idea here with the IV percentile high. But make sure you don't expose yourself too much. Always have some protection, like spread is a good idea. So with that, let's jump into fundamentals here. As you can see here, company has done nicely. They were $65 million market cap. Now they're 1.5 billion-dollar market cap. So it's done nicely. As you can see here, 2020, this is where COVID kind of spiked up, and from here they've increased their market cap very drastically, 348, 933, almost threefold, as you can see here. Then again improved drastically into 1231. Overall, last year was a very good year for this company. And from a price perspective, as you can see here, it's done nicely. It's a very good improvement in the price. And from a sales perspective, I think it's a nice sales acceleration from 6 million all the way to 8 million, 17, 102, 295. That's a very good growth here. That's why this acceleration, you got to pay attention to this acceleration here. 12, 31, 20, so much number here, 3,400. So you're comparing this number to 12, 31, 19, 12, 31, 19 right here. So they did 8 million here. They did 295 million here. If you compare, that's a huge increase. That's the 3,400. But now what you have to do is really next quarter is coming around the corner. That's the March quarter. You got to look at the March number here. March number here is 8 million. So if they do well, I think they can do much better than 8 million. So if they do much better than 8 million, then I think they can do very good comp. But comp like this it will be very difficult. But at least they can beat this $8 million number very nicely, I would think. So that's why there will be at least some growth. They have been, giving a surprise on the revenue surprise side, as you can see here many times, positive surprise. And one thing you got to note here is negative surprise from a EPS perspective, earnings per share perspective in March. So now we are, coming up with March. We got to watch out. And earnings per share negative surprise. Revenues negative surprise in 12/31 and revenue negative surprise in March. So at least by looking cursory look, it looks like their March. Typically, they got a little bit issues when it comes to quarterly earnings. So March here, March over here, there is some negative EPS surprise. So something to watch out for. And they also have a little bit, challenges in the 12/31 quarter. It's a negative revenue, and 12/31 here again negative revenue. I think overall from a gross margin perspective, company doing well. Operating margin, same story. Company is making money from a net margin. Valuation is a little bit high, but with this pullback, I think still it's high. Um, and I think that's one thing to watch out for. Price to sales perspective, I think it's pretty okay at this point. But I think for these companies, we should probably ignore PE ratio, price to earning ratio. I think better ratio is price to sales ratio, which is not bad at all. So with that, let's jump into chart here. By looking at the chart here, I think stock is kind of trading down of late. They're below their 9-day moving average, 25-day moving average, and even they're below their 50-day moving average also. So I think right now all the fundamentals or technicals are indicating they are in a little bit bearish move. Today also stock took a little bit big dip here. It's down $8 as you can see. Earnings is coming around the corner in next 5 days. That's why the volatility, as you can see here, implied vol, it's racing because earnings is coming around the corner. And if you look at the DMI chart, the red line here is above blue line. It's also pointing a little bit upwards, indicating it's kind of showing some bearish pattern here. And on the balance volume, it's kind of stabilizing here, not going down, kind of flattish, I would think. So I think there are people have interest to buy this stock. And from a money flow perspective, check in money flow. Money flow is pretty steady at this point, a little bit downish, but a little flat at this point. With the stock falling off so much, there are contrarians who want to buy, as you can see here. So by looking at this chart, it's a little bit hard to say, but typically what I would do in these scenarios, given stock has fallen off drastically and it's kind of stabilizing, I think we can be contrarian here and buy some before the earning. Don't buy too much with the short so high, I think there is a chance that this stock can do well after the earnings. Next, let's look at one more chart here. In this chart, we kind of look at slow stochastic here. It's a 2-day, 2-year, 3-day chart here. If you see in the slow stochastics, as you can see here, the blue line here is pointing downwards and red line is a little bit flat. So at this time, by looking at this, it's a little bit a bearish type sign here, but I think it's okay to be a little bit contrarian. We could buy some before the earnings, and then we can buy more if the stock falls even below. And MACD kind of suggests it's as you can see, histogram is on the below zero. So I think it's maybe showing some signs of stabilizing at this point, as you can see here, which I think it's if you buy now, you're a contrarian. So I think it's okay to be contrarian with the stock being a little steady. And from a TTM wave perspective, as you can see here, I think it's kind of the longer term A wave is above zero at this point, and it's showing some signs of bearishness. As you can see here, this bright blue lines, those are reducing in size. That's a little bit bearish indicator. And also I see a red line here in the shorter term A wave. So that suggests at least there is some bearishness in the stock, because it's fallen off so much. Normally when the stock falls like like this, all the technical indicators will always look ugly. And with the um, awesome oscillator here, it's kind of showing some it was very negative here, stock falling off so badly. Now it's kind of evening out. It's the bars are becoming smaller and smaller, which is a good sign. As you can see here, in the past, as the bars became smaller and smaller, there is a chance it can turn to green. That can make the stock also to go up a little bit. There is a chance this can do same thing here. It can now turn into green and start going up. Any good news during the earnings, it can go up. Accumulation distribution perspective looks like it's in the not in the accumulation mode, probably in the distribution mode. It's pointing downwards. So with that, I would not buy too much at this point. I would buy a little bit, accumulate a little bit, and as earnings comes through, you'll know. And if it's stabilizing, you can buy more. So with that, if you look at the monthly performance matrix, the way to read this chart is I got years on the top, 2021, 2020, 2019, and then we got yearly performance here. This year they have done 27% negative, and 2020 was a banner year, same story. 2019 they have done nicely, and I think 2018 all the way through 2016 they have not done much. And if you look at the range here from $78 low all the way to 189, there is a huge range here. Same story, this stock trades wildly from $6 to $52. That's a huge range. And if you look at the monthly performance here, from a cursory look, you can see March is always a difficult month for this company. March dropped, March here drop, March drop, again March they dropped. And April, so far, they have dropped. I think if you see here, April 2018 they dropped, 2017 they dropped. But if you look at May, I think they dropped a couple times. In a nutshell, this company is known to drop in price. A couple months, as example here, they dropped so many months in a sequence, and then they will pick up and start going upwards. So I think the theme here is really because companies stock has dropped so much, and continuously for 3 sequential months, there is a chance any good news around the earnings, it can make the stock go up, given there is a high short ratio. That's why I suggest buying a little bit of stock before the earning, and then if the stock stabilizes after the earning, then you could buy more. If the stock goes up drastically, then I think it always gives you a chance to buy again. So that's how I would play it. I think that's a nice way to play. So with that, thank you very much. Happy trading.